Hi everyone, now we are going to discuss about GDP and related concepts. This is 18th chapter of IE and FS paper.
Segment 1, System of National Accounts, SNA. The System of National Accounts, SNA, is like the rulebook of economic measurement created by the UN and global institutions like IMF, World Bank, and OECD. It ensures countries measure their economies in a consistent, comparable, and internationally accepted way. India adopted the 2008 SNA framework, revising its GDP base year from 2004-05 to 2011-12 in 2015. Why revise? Because economies change, new industries emerge, consumption patterns shift, and data sources improve. Without updates, GDP would give a distorted picture.
Methods of GDP computation. There are three main approaches, each showing the economy from a different angle. 1. Expenditure method. Formula. GDP equals C plus I plus G plus XM, C, consumption, household spending on food, rent, healthcare. I, investment, business spending on machinery, factories, housing. G, government, salaries, defense, infrastructure projects. XM, net exports, exports minus imports. 2. Income method. Adds up wages, rent, interest, and profits. Shows how GDP is distributed among workers and businesses. 3. Production method. Calculates value added in each sector, agriculture, industry, services, and sums them up. This table will give you clear understanding about the calculation part of the GDP. Expenditure method focused on total spending of the economy. GDP equals C plus I plus G plus XM. Income method focused on distribution of the income. Wages plus rent plus interest plus profits will give output as GDP and production method focused on sector-wise contribution to GDP. GDP versus GVA. Gross value added, GVA, supply-side measure, sectoral contributions. GDP, demand-side measure, total expenditure. Relation. GDP equals GVA plus net taxes, subsidies. Example, if agriculture adds 10 lakh rupees crore, industry 20 lakh rupees crore, services 30 lakh rupees crore, total GVA equals 60 lakh rupees crore. Add net taxes, and you get GDP. This slide will give you clear difference between gross value added and gross domestic product. These formulas are very important for exam point of view.
Segment 4, Utility or Limitations of GDP. Strengths. GDP is a quick snapshot of economic size and growth. Limitations. 1. Income inequality. GDP doesn't show distribution. India may grow fast, but wealth is concentrated. Though, regional disparity, some states contribute disproportionately. Teen. Welfare gap, high GDP, high human development. HDI is needed. 4. Green GDP, rising GDP may come at the cost of environmental damage. 5. Financial inclusion, GDP doesn't reveal who is excluded from the financial system. Segment 5, Variance of National Product Aggregates. GDP, value of goods, services within borders. GNP, GDP Jod net factor income from abroad, NFIA. NDP, GDP depreciation. NNP, GNP depreciation. Personal income, what households actually receive. Disposable income, what households can actually spend after taxes.
This slide will give you an idea about the GDP, GNP and remaining important terms. This flowchart gives you an idea of how money is flowing in the system. In an economy like India, how you will get this disposable income is shown here. India's 2021-22 data snapshot. GDP at current prices, 236 lakh rupees crore. Growth rate, plus 19.5%, post-pandemic recovery. Private consumption, approximately 60% of GDP. Investment, GFCF, approximately 28.6% of GDP. Exports, 21.4% of GDP. Imports, 23.9% of GDP. Now you can easily differentiate the terms of economic indicators. This slide will give you a quick understanding of the key economic indicators for easy revision before exam.
Question number 1. The System of National Accounts (SNA) is prepared under the auspices of a. World Trade Organization, b. United Nations, IMF, World Bank, OECD, Eurostat, c. Reserve Bank of India, d. Ministry of Finance. Answer B. United Nations, IMF, World Bank, OECD, Eurostat. Question number 2. India revised its GDP base year from 2004-05 to 2011-12 in a. 2010, b. 2012, c. 2015, d. 2018. Answer C. 2015. Question number 3. Which of the following is not a method of GDP computation? A. Expenditure method. B. Income method. C. Production method. D. Balance of payments method. Answer D. Balance of payments method. Question number 4. In expenditure method, GDP is calculated as A. C जोड़ I जोड़ G जोड़ XM. B. Wages जोड़ rent जोड़ interest जोड़ profit. C. GVA जोड़ net taxes. D. GDP depreciation. Answer A. C जोड़ I जोड़ G जोड़ XM. Question number 5. Which of the following is not included in the income method of GDP? A. Wages. B. Rent. C. Interest. D. Imports. Answer D. Imports. Question number 6. GDP by production method is calculated by A. Summing value added across sectors. B. Summing household consumption. C. Adding wages and profits. D. Deducting depreciation from GNP. Answer A. Summing value added across sectors. Question number 7. GDP equals GVA जोड़ A. Depreciation. B. Net taxes, taxes subsidies. C. Net factor income from abroad. D. Personal income. Answer B. Net taxes, taxes subsidies. Question number 8. GDP at factor cost equals GDP at market price, subsidies. A. Direct taxes. B. Indirect taxes. C. Production taxes. D. Imports. Answer B. Indirect taxes. Question number 9. Basic price equals factor cost जोड़ production subsidy. A. Product taxes. B. Production taxes. C. Indirect taxes. D. Net exports. Answer B. Production taxes. Question number 10. Real GDP is measured at A. Current year prices. B. Base year prices. C. International prices. D. Market prices only. Answer B. Base year prices. Question number 11. Which of the following is not a limitation of GDP? A. Ignores income distribution. B. Ignores regional disparity. C. Ignores welfare indicators. D. Ignores depreciation. Answer D. Ignores depreciation. Question number 12. Green GDP accounts for A. Inflation. B. Environmental degradation. C. Imports. D. Subsidies. Answer B. Environmental degradation. Question number 13. GNP equals GDP जोड़ A. Depreciation. B. Net factor income from abroad, NFIA. C. Net taxes. D. Net exports. Answer B. Net factor income from abroad, NFIA. Question number 14. NDP equals GDPA. Subsidies. B. Depreciation. C. NFIA. D. Indirect taxes. Answer B. Depreciation. Question number 15. NNP equals GNPA. Subsidies. B. Depreciation. C. NFIA. D. Indirect taxes. Answer B. Depreciation. Question number 16. Personal income equals private income. A. Corporate profits जोड़ taxes जोड़ retained earnings. B. Wages जोड़ rent. C. NFIA. D. Depreciation. Answer A. Corporate profits जोड़ taxes जोड़ retained earnings. Question number 17. Personal disposable income equals personal income. A. Depreciation. B. Personal taxes जोड़ direct taxes जोड़ fines, fees. C. Imports. D. Subsidies. Answer B. Personal taxes जोड़ direct taxes जोड़ fines, fees. Question number 18. Operating surplus includes a. Rent जोड़ interest जोड़ profit जोड़ dividend. B. Wages जोड़ rent. C. Consumption जोड़ investment. D. Exports imports. Answer a. Rent जोड़ interest जोड़ profit जोड़ dividend. Question number 19. India's GDP at current prices in 2021-22 was approximately a. 180 लाख रुपए crore. B. 200 लाख रुपए crore. C. 236 लाख रुपए crore. D. 250 लाख रुपए crore. Answer C. 236 लाख रुपए crore. Question number 20. In 2021-22, private final consumption expenditure (PFCE) accounted for about a. 40% of GDP. B. 50% of GDP. C. 60% of GDP. D. 70% of GDP. Answer C. 60% of GDP. Thanks for watching. Like, share, subscribe.